If you look at the general trajectory of revenue growth versus, sort of right after the pandemic, but pre-pandemic, it's much higher. And that is reflective of Atlanta Fed GDP clocking in the neighborhood of 5% right now.
Julian, I like your 2026 outlook note here. What could surprise in 2026? What are some of the things you think people should be on the outlook for in terms of surprises?
Well, the surprise was number 7 on the list, the potential for the U.S. taking control of Greenland.
Okay.
We in retrospect, we put that note out Sunday morning. We'd probably bump that up a couple of places. I would say what's interesting now about the setup is that you had all this angst around debt financing, around the AI build-out at the end of last year, credit default swap markets getting stressed, certain hyperscalers' share prices getting stressed, to the point where there's enough skepticism around the AI story and technology in general that in our mind, it's almost sets up as a contrarian play, and we're very excited by that.
So, I mean, we kind of came into Davos thinking that AI might be the discussion point for the week. That got thrown out with, and now it's all about Greenland and tariffs right back. It's almost like we were April of last year here. How much of a risk is that to the market? Or can this market just, as it's done in the past, kind of look through it maybe?
Well, so again, this is one of the, you look at the last 3 years, a lot has been thrown at a market that is being driven by the secular growth and productivity bump potential of AI. But again, we're in the 4th year of this bull market. It should be more volatile. And our view was the aberration was there was too much complacency to start the first 2 weeks of the year. That's over.
I mean, your advantage is you're working with the economic combine of Evercore ISI. To be clear, you guys nailed no recession. When you look at the data that you're famous for, like trucking and railroads and all that, do you still have American GDP to drive revenues and drive earnings?
Absolutely. In fact, the company surveys hit their highest level since very early 2024, just this last week. Things are moving along in the right direction, and the econ team raised their forecast to 2.5% GDP for 2026, and I would say that even at that number, the bias is still to the upside.
First thing I did today, Paul, is I looked at the NASDAQ futures and the drawdown. It's like negative 6%. It's like we've cratered. Not, folks, I'm kidding. I'm looking at Standard & Poor's 500, and coming off the debacle last April, we legged up one leg, 2 legs, and then off we went to the races. Do you see the same thing this time, that we've got Greenland angst? Somehow it will get solved, and we'll have a multiple leg up and a reaffirmation of a bull market?
We think it's going to take a little bit more patience this time. So if you think about it, one of the extraordinary things is that, for instance, the February to April leg down last year happened so quickly that unless you were an active manager at a hedge fund where the risk manager tapped you on the shoulder and said, lighten up, you did nothing because it happened too quickly. And in fact, the public was a buyer the whole way down. We think the way this year unfolds is you're going to have, this is the first bout of what we think is higher volatility. There will be multiple bouts. And the key here is going to be patience and sticking to your knitting and having the cash to deploy, down 5 and down 10, which we think we might see multiple times on the way to 77.50 by year end.
With us, Julian Emanuel, Evercore ISI. We welcome all of you here to the Lisa Mateo Hour. Bloomberg surveillance worldwide across the nation. Lisa Mateo, Michael Barr, Paul Sweeney. We're all back together. It's amazing.
Sure. Yeah.
Are we having any group lunch today?
Oh, I don't know. We should.
McDonald's, 3rd Avenue?
Exactly, 3rd Avenue.
That window seat in this cold is just really remarkable. We say good morning with our coverage from the World Economic Forum as well. Lots of people. Howard Lutnick, I'm told, will be with us tomorrow. Other worthies here today, including the leadership of Morgan Stanley. The way you listen to us, thank you. Nathan Hager Radio, 99.1 FM in Washington, 92.9 FM, Good Morning in Boston, Bloomberg 1130 in New York. And on YouTube, I just can't say enough, folks, how I'm learning about this digital experiment each and every day. Subscribe, out at YouTube to Bloomberg Podcast. That's what Julian Emanuel does.
Yep.
Paul Sweeney with Mr. Emanuel.
Julian, what are we doing in the bond market here? 2025 was a really solid year for bond investors, high single-digit total returns here. Are we just clipping coupons maybe in 26?
I think it's a little bit more complicated here.
Okay.
Look, first of all, if we knew nothing else, the idea that Japanese yields are exploding and that increases the global competition for capital, it has to put upward pressure on our yields.
Right.
Again, lots of expansion plans, getting involved in lots of other countries and territories, all of that, plus the midterms, there's going to be fiscal expansion.
Brilliant. We're going to stop the show right now, folks, because this is the research item of the moment with all the comments from the Secretary of Treasury yesterday. Julian, I'm in the camp, as you just stated, that and even Liz Ann Saunders at Schwab said 7 standard deviation move in Japan. All you need to know, folks, is the word big, B-I-G. A big move, price down, yield up. It does affect American finance. The Greenland, the Davos, the president, what's he going to say? Mark Carney's magisterial speech yesterday, does that affect the finance world as well?
Absolutely. At the margin, all of that creates more volatility. And again, in a world where we have to face it, the 40-year secular bond bull market ended in 2020, and we're in a new higher yield regime, and we've gone sideways for 3 years, and that's likely going to end.